Okay, this is going to be a review for Monday, the 25th of August. Had a pretty good day today. Found a couple of really specific frameworks and traded them quite well, which I was very happy with. And then on a couple of my accounts, I went and continued taking trades, and which was detrimental to my P&L. But as you can see, this is a already blown combine, but I just took the one trade on this just to prove to myself that I can just take one trade and do quite well with it. And it was using a very specific framework, and that is the RTH trailed stops framework. Basically looking for a gap down for us to engineer a high, entice shorts, and then attack that high. So I caught a nice long on the 15-second chart in this area. On my 5k challenge, I also managed to jump in here on the strong closure above the midpoint of this wick. And I actually did a really good thing today as well, where I was able to recognize that ES had taken out the AM high at this point here. And so I was able to reduce risk by taking 2 off as it started rejecting, and then also tighten my stop loss up to a lower time frame invalidation point, which was the low end of this long wick, which stopped me out properly, and before we sold off well below where my stop loss had been. So really well played there, and despite getting stopped out, still made just under 1R on the trade. It had a lot of potential in it. I could have easily got out with over 2R as well. But yeah, it's definitely had, you could see the big picture. I was very confident in this. We had in fact, I'll jump across to the other charts real quick, and then I can actually show you everything I was looking at. I'll do a top down and then make it a bit more clear. So to start with, extremely bullish on the high time frame. You can see that. I'll just stay on this time frame for now, but that's an all-time high. We recently pulled back into the range. This is Tuesday last week, sold off aggressively. We took out this previous day low. This is a impulse low, a swing low on the daily time frame. We took it out on this candle here. During this drop lower, we didn't take any trailed stops throughout this area. We just rolled over on the next day going into Wednesday. Wednesday sold off aggressively again, enticing more shorts. We then gave plenty of room for people to get short as we ran up and created these relative equal highs. When we do that and we continue moving lower, that's indicating that we are actually permitting traders to short below that level. And if we're permitting them to short, it's because there's someone who wants to buy from those traders. So the fact that we did that and we've got this really clear accumulation and then really strong displacement out there leads me to believe that we are still very bullish on the high time frame. That brings me to the narrative. So although I think we're bullish on the high time frame, what happens after a big rally and a bull flag? Well, people are buying up here. Everyone's chasing this move. They're going to want somewhere to trail their stops. Smart money is also going to want to accumulate even more of a long position. So what they'll want to do is entice people to buy, have a bit of a pullback, create a nice strong looking low for people to trail their stops at, entice higher, and then come straight back down. That's what I'm expecting, and that was my expectation going into today. That created a bit of a problem initially, because if we look at the RTH chart, which this is the regular trading hours chart on the right, we can see that we had a gap down. And if we're going to open with a gap lower, the RTH trailed stops model is to look for a long. But if we also have this rally over this side, and then I'm expecting us to target trailed stops at the low as well. But it actually worked out really nicely, because these lows in here on the regular trading hours, we never enticed away from the rally. Sure, there's a little rally here, but we never really enticed longs. And so if anyone who bought chasing this move, no one's dumb enough to move their stop loss right to there. And so I needed more narrative, and to give that narrative, I expected us to engineer another low, then have a nice enticing move away. So my trade was actually trading the move in that direction, and that lined up perfectly with the framework that this model offers, which is a long targeting this high. So that all worked out really nicely. The next thing that jumped out at me was on the 1 hour chart actually. I'll jump to the 1 hour real quick. So the 1 hour ahead of the open, we have this nice long work at 6 a.m. and then at 8 a.m. we make smooth lows with that work. So it just doesn't look like much of a low. And I could tell that there was likely going to be sell sides engineered below here. On top of that, if we jump down to the 1 minute real quick, I can get a closer look on the electronic trading hours at that area. So that is that 6 a.m. and 8 a.m. relative equal lows. Remember how there's the long work on the 1 hour charts. We've also got a 5 minute and a 1 minute long work. A lot of the time when they're painting a certain narrative with the wicks, multiple timeframes will confirm the same narrative. The narrative here is that we engineered an obvious low with long wicks to make people think that it's a bullish rejection. Smooth lows also giving that idea of a strong support level, a great place to put your stop loss if you're long. The next thing that jumps out is how we have the buy side up against this resistance level of the 500s. And the last thing I want to point out, and I'll just copy paste this real quick, is the hourly opening prices. So I'll go to the 2 minutes so it's a bit easier to see. Using the hourly opening prices, below midnight is a discount, so we're below midnight. Below the 2 a.m. open, that's the 4 hour candle. We've spent the entire time at a discount below that level. We've also got this area, and this is what had the most interest for me. Multiple hourly opening prices at essentially the same level or very close to represents a consolidation, an original consolidation. Once we have that, we have this expansion lower. We have a bit hard to read the structure in here, but we have first stage of the market maker model. I suppose you could call that the intermediate term high, short term high to the right of it. And then second stage, I suppose, would be right at the open. But essentially there's a market maker model, and when you can identify this, particularly this, where we have relatively the same level hourly opening prices going ahead of the 9:30 open, a lot of the time the 9:30 will play into that market maker model, either in any stage of it. It could be that 9:30 opened here and it was first stage of the market maker model, or 9:30 opened here and it was second stage, or in this case 9:30 turned out to be the smart money reversal. You could also have 9:30 opening up here for second stage on the way out. But if you can recognize that structure and you know how to identify market maker models, that can actually help a lot with the 9:30 narrative and bias. But that jumped at me as a really high probability target, as well as the narrative I already mentioned. And then the last thing that's really got me super confident on the longs was, one, the fact that we had rolled over overnight. We'd just taken out a short-term high at 1800 and then just been making lower highs ever since. On this most recent leg low, we have this impulse high, a very, very obvious high that just really stands out to me as a high probability place for price to reach to. So now I'll jump down to onto the right, and I'll try and get this done relatively fast because I'd love to go over a gold trade, which was actually the exact same narrative for the gold long I took during London. So yeah, you keen to show that. Yeah, 9:30 opening of a gap lower. We immediately make a nice long wick and sell off. So already we have a nice target. So engineered high with enticement low, enticement with a long wick, as well as this movement lower. We are also taking out these relatively equal lows from the overnight session. So that's these lows just here. And on top of that, we are opening up below all of these, the sell side from the regular trading hours. So straight away, you know that we're tripping in a whole bunch of sell side. We're not only taking out the sell stops from long holders in this area, but also breakout shorts down here as well. So there's a lot of selling going on. We are bullish and want to be watching very carefully for a long. If we bring up the ES below us, we can see that we've got some SMT on the lows straight away, really close to the open, and right there. And so as soon as I saw that, my eyes were jumping to this wick. The reason why this wick is because it's a nice long wick that we've then run below. And if we were bearish, I would expect us to remain below the midpoint. When we got this very strong closure up through it, as mentioned on my 5K challenge, I jumped in long right there. And then on the combine, there was a 15-minute impulse rejection failure model set up just there. But I'll go over the rest of the 1 minute chart here, and then I'll jump down to the 15 seconds. So we have this nice climb up. There's a nice 15 seconds high up here as well. That was a great place to take a partial, which I did. And once that happened, we had the sell off here. ES was then hitting the highs, as we can see if I compare them. So ES was already at this point making these high highs. And I recognized that that was a sign that we could just roll over lower from there because we did have the SMT. And when that happens, what I do is I demand that NASDAQ catches up straight away. And how I do that is by reducing risk. So rather than having my stop loss where it was below this gap, so that was my stop loss, I instead trailed it up to below the midpoint of this wick, because similar to down there, if we have a long wick and we start pushing up into it, I want to see us overlap it, get above it, and once we're above the midpoint, we should not come back down to the wick low. So once I saw that, I watched this rejection up here. As I got the rejection, I took a partial and I trailed my stop loss up to there, got stopped out, and that was really, really well played on my part. I was really happy with that because there has been times in the past where ES has had a similar situation, ES has hit its pull, and I've just stubbornly continued trying to go long, but this time I did a really good job with recognizing the change and managing it appropriately. And I went from, if I kept my stop loss down there, it would have been a break even to small red trade. And because I was able to bring it up, I basically kept the combination of taking a partial here on this rejection of my runner and then also moving my stop loss up to here actually kept me at I didn't lose any money from this reverse right here from where I was, even though my stop loss was still a bit below break even. So worked really good. This bit here threw me off a bit. We have this deep pullback. If we jump to the 15-minute chart, we can see that we actually made relatively equal lows with long wicks. That threw me off because, as I mentioned, I am anticipating us to engineer a low to entice longs. And after a move like this, I thought, okay, maybe they've just printed these long wicks so that they can roll over it straight away on the next candle. And as you can see, we did end up enticing high anyway. What I figured out is that it actually makes sense, because if we are engineering a swing high or swing low for the purpose of coming back to accumulate it, it will have high resistance signatures such as relatively equal lows or anything like that. The same as up here. We engineered this buyer side for the purpose of running out in the future as we are high time frame bullish. And as you can see, we're disrespecting a lot of PD arrays up in this area, namely the wicks on this time frame. but you can anticipate the same thing down here. So really, in this situation, I should still be committed 100% to the longs and watching for that change in state, which we do get as we have some nice SMT on these lows. There isn't much that's clear here on the 1 minute chart. So I'll drop down to the 15 seconds and then go over that. Yep. Drop down to 15 seconds. I want to try and do this relatively fast if I can. So the 9:30 open, that's 9:31, making that a short-term high and selling off, that impulse high as well. That's that long wick. This is just those relatively cool lows. We can get rid of that. So the long wick, we drop below it. We then rally back up. That's that close at the top end of that long wick. So that's your first long entry. I didn't need it to drop back down into this wick because of this price action here with all this backwards and forwards price movement there, and the speed of which we ran back up. I anticipated that we should remain quite strong. We'd also tap down into the institutional level of the 50s as well, so got a really nice reaction out of that. No retest of the 50s as well, which is a signature I can look for. I was able to get along there. We then have, I'll move this up here as well, the 80s level. When I'm looking for longs, I want to accumulate below these levels if possible. This is a 15-second swing high that made the low. The model is that we get above it, we take out some sell side below it, get a close back above. That right there on that candle's close is the entry signal, and I want to try and get long as close to that change in state, that market structure shift as possible, and put a stop loss nice and tight down below that low. That delivered really nicely into this high. That's already 3R or so up to this high. Great place to take a partial from this entry because as you can see, it did come back down. There's that playing around inside that range, running out the high, getting that strong rejection off of it, and getting stopped out nice and fast. And yeah, so those are the two entries there. On this side of the curve, what jumped out at me before is, sure, there's no swing high on this time frame, but obviously on the lower time frame that is a swing high, and there are no inefficiencies above it. So if we do run up to this high, you would demand a strong rejection, especially if we are, say we were bearish. If we were looking for shorts and we start selling off like this down to deep end of the range, you'd want to see this left open as a gap. You'd want to see a fair value gap here. You'd want to see the majority of that gap stay open and us to continue pushing lower. The fact that we reversed straight back up at that is not a good sign for the shorts. And then also, once we do reverse back up, if we were bearish and we hit a swing high like we have here, you'd want a very solid rejection back down, kind of like we got up here. We hit the high and a sharp rejection back down. We get that, we start rolling over, and then we come straight back up, push through it multiple times, and then right there, we get that closure back above. That's the same sort of setup as we got here. That'd be a long, and get this nice run up into the highs. Once again, we have a impulse high just sitting there. That could be a great place to take a partial if we are getting an entry there that's still decent, and to at least reduce risk or take a larger chunk off. This is something I figured out from last week that could have helped me a few times. When I have these tight entries, rather than taking off 50% and the rest stopped at break even, take off 90% and leave your stop loss in place and add more back at your original entry, because a lot of the time these market structure shifts become the places we reaccumulate. You could say the same thing down here with this market structure shift. It'll be on the 5-second chart, but that is where we ended up coming back down to as well. Following that, we have this consolidation in here, and this is a pattern that I recognized from some backtesting on the weekend. I saw this similar situation on the 1 minute time frame where we engineer a high so we have a rally, engineer a high, have a pullback, Then when we engineer this first low, it's very high resistance. We're leaving smooth lows, spending a bunch of time down here, 4 candles, before rallying high. We then leave smooth highs, and then an aggressive sell-off that takes out that low. After rating this low, we get a nice strong rejection back out of it, and it pushes to the upside. That was also a very nice area. I did take part of the over trading. I did catch a nice long up here. A long that worked out using the 15-second time frame. I saw that we'd run out this impulse low, hit a nice rejection back up. So failure to close back below that, getting a impulse rejection, putting in a low time frame first stage in this area here, and then I was watching as we pushed up through this high. We had this run down that's got a really nice reaction off of this order block, ripped straight back up, and this was also a very long wick on the 1 minute time frame. So we were clearly pushing back into this wick, and I expected us to continue pushing up. So I was able to catch a long there with a nice tight stop right there, and worked its way up quite a bit higher, all the way to that 50s level where I was able to take the profit. So yeah, there's heaps of opportunities, but it's things like this that I love trying to find those kinds of trades, and because I've got heaps of models that, you know, they do work, but I can't achieve consistency if I'm looking for 15 different models all at once. And if I just focus on one thing like I did with this long, that is repeatable. That is very straightforward and what I'm looking for, and that looks really good. On the other hand, if I jump to my other account, the practice account, so that's that long I took, as I mentioned, getting long down there, taking partials up through here, and eventually getting stopped out on the 10 remainder. Oh no, I got short there. Hold up. Okay, so no, I didn't get stopped out. Got long, took partials. I got stopped out on this wick right there, just took me out. So I was trailing using the 2 minute trailing stop. I then get short in this area as we are overlapping this long wick using a 15-second model. Take a partial, get a bit more out, and eventually so I took the whole thing off here because I didn't like how I was reacting straight back up. I then get long. So this is, sure, it's a practice account, I'm just messing around, but still, I was nicely in profit after these 2 trades. They're both winners in profit. Then I immediately flip back long because obviously I'm still long bias. We're back above this wick. I figured, okay, I'll just jump long again, and then it stops me out. I try again, I get stopped out again, it comes straight back down. I then get short, and then it stops me out again. At this point right there, I recognize, okay, we're clearly in a consolidation, and if it's consolidation, it's going to expand in the direction of the current trend. Out of curiosity, I'm just looking at what ES was up to right there, if we did have SMT on the highs or not. But as you can see, ES was, you know, divergence on the lows and the highs. It was confusing me a bit. But in general, we still hadn't hit my key targets. And there's reason to still go higher. So there's a lot of flip-flopping in this area, and that was kind of unnecessary. Another thing to note is that when we are consolidating above buy side like this, that's when we are building EQ of the range. And essentially what that is, if we identify the consolidation range, which I would assume is this. So the midpoint is there, that line. Now if we measure from the low and then put the EQ above there, gives us a projection of all the way up there. So maybe that's not the right range to use. But essentially the theory is that the consolidation represents the midpoint of the range. That's the future dealing range. But yeah, maybe that's not quite the one to be using. But in any case, consolidation, I shouldn't be jumping short and long and changing my mind. I need to get better at identifying the consolidation earlier on. But yeah, I might just put a alert down here. Don't think I'll need an alert actually, it's about to hit. I'll go over gold next. I'll just manage this trade real quick. So this is actually to target all the way down here. But we've been leaving all these smooth highs, so I didn't really want to just leave it, let it come all the way back up. Otherwise I would have left my stop loss in the original position. As you can see, I'd already trailed my stop and got stopped out there on partial. But once we do hit these lows, that'd be a great place to take some off. And I would like to hold some overnight. The only problem with that is that with this prop firm, when the markets open, it will only fill me after maybe 15 minutes or so. So if we open, let's say up here, and then push 100 points higher, then in 15 minutes or something, then it will only fill me at that time, which would be very not ideal if I have a lot of size on. So once we hit that low, I'll take a partial off, and then I'll let the rest run overnight. Just put an alert there. So on to gold. I'll show you the trade I took first, and then I'll explain it. Basically buying down here on a 15-minute order block, and then covering up on the way into the range, adding below this low, which is a old trailed stops low, and then taking some partials out, and then getting stopped out at break even right there. I would have added back below this low, but we made perfect equal lows. Didn't quite get me on my fill, and then ran up to my targets. But really cool to see it play out like that. All right. See if that hits or not. It should do. So for gold was the exact same story, so I'll try and do it a bit faster. It was basically the exact same thing that I just mentioned on NASDAQ. We had the very similar move on that Friday of this big rally up from below this old previous day low. And then we started bull flagging. Going sideways and looking for that same narrative. I want to see us engineer an obvious low, entice longs, and then head lower. I got to the charts at around here somewhere. And I'll take that just partial off. Beautiful. So we had already engineered this low and started moving away higher, but there wasn't any like significant displacement high yet. It's like with gold, it has these big, like pretty big ranges and big moves. I'd want to see a bit more of a run up into the highs than just this little pump there. On top of that, this is the 1800 open right here. And as you can see, we had actually not taken out any buy side. So it had been sinking low all day. We still hadn't taken out any buy side up in this area here. And I really liked this. So we have a sell side pull in the form of a 15-minute impulse low. We then have a bull flag. So we have a enticement from an impulse low into a bull flag. So really enticing longs. And then just below it, we have a untapped bullish order block that this low conveniently fell just short of. I saw that. I had the narrative of that, okay, I expect us to entice longs. I don't think this is sufficient. And the technicals are supporting the idea of there being a very significant pool of liquidity in here, as well as an untapped order block. So I decided to buy below down there. Drops into it, get this beautiful reaction out, and a nice market maker model. They head up to the high of day. Came all the way back down to the lows, made smooth lows. Once again, leaving those smooth lows being perfectly fine if we're expecting us to come straight back down, which we are. So longs in this area, despite the smooth lows, could have been perfectly fine. And then if I go to the 1 minute chart, so I do want to do this quite fast. Zoom in a bit. So we've got midnight price, we're below the midnight price for one. You can see that we have 4 AM dropping lower, 5 AM as well, and dropping below this sell side pool. So below the sell side and into the bullish order block. As we hit the bullish order block, I was interested in this. There's a wickless 15-minute candle right there. Put it on a position as we hit that. I then wanted to add, as we came a little bit deeper into the range, I had my stop loss sitting down in this area, so giving it plenty of room in case it did want to take out this impulse low, which it didn't. But what I saw in here is we got this nice long wick printed. So this gives you the idea of enticement, enticing longs, a nice big rally. Immediately comes straight back down. So immediately I knew, okay, I'm not adding just here. It's likely to make a new low. Then comes down, takes out the low again. Nice rejection out of it, and it doesn't get back below that. So I actually had a limit buy for more size just below this low. It just didn't give it to me. But I got this beautiful push up. As soon as I saw that, I recognized that, yep, this is exactly what I wanted to see. My eyes jumped to this high. Did we hit this high here? There's buy side above this high from the sell-off. We had not hit it yet. This is all very well balanced. This range, this is all balanced. Here's a delivery on the side, no inefficiencies. So I knew that we'd leave a breakaway gap here. So I bought as we dropped back into the hourly open, which is the order block. Caught this run up into the range, and I took partials as we hit the midnight price and this old high. And yeah, and then adding back in on this side, the reason I picked this low, so when we have a aggressive bullish move and we engineer a low for trailed stops, that is the low I want to use in the future. That works really nicely. We got a nice reaction there. It didn't give me a fill, but I did get a fill as we dropped into it here as well. Got a nice 15-second entry right there with a super tight stop. Once again, getting a really nice 2.5 to 3R before coming back below my entry. Took me out of break even, which is fine, and then eventually delivered really nicely. Let's see. Just trying to think about if I've missed anything. This is that markup for NASDAQ. You could pause it and read all this if you want, but that's just saying what I'd already said with the narrative as to why it was, very tidy and very overcrowded. I'm very well aware of that. However, yeah, just wanted to put all the information on the chart and just do a big brain dump basically. But the exact same things I just showed you with those 4 different entries. I can then show the rest of my execution. So that's the gold trade, that's that long. The ads just there. Taking the partials out, adding at that old low, the 15-second entry, and stopped out at break even. Looks like NASDAQ is moving nicely. I'll show you the rest of the execution. So this account was actually above 5K, or got up to 5K after being in drawdown. Might take another 1 off down here. It's a very nice move into the close. And I think it'd be okay to actually leave this, because one, it's very tiny size, so even if it did somehow gap up heaps, wouldn't be much of a loss, and I might as well just let it hit my target. But yeah, so as you can see, there's a lot of arrows in this area. I did catch some nice winners to start with. Then, as I mentioned, I took a few too many trades. I only use this account today. I do have two 5K accounts. One is at 5,240. I just need 160 more to pass that for the phase one. And then this account was in drawdown, so I figured that on this, like today, I was just going to focus on this one. And as I mentioned already, this is the exact same NASDAQ long. So I got long on that 1 minute closure above the midpoint of that wick. That was my main entry. We then get that 15-second entry as well. I tried adding, as you can see, there's a bit of a spread on this account. My fills were not the best at all. Because of them not being the best, you can see I actually took a partial right away because I didn't want too much size on, and then was aggressive with partials, taking the last partial up above that 1 minute high, just there. It's hard to see. There we go. Pulled back. That was me taking a partial and then getting stopped out at the low end of that wick. I then let it sit and then tried buying again. So initially I tried buying. Or did I? Was it a sell? It just shows you how bad my memory is after a session like that. But yeah, as you can see, that was a short. So I switched my bias because we made those relative equal lows with the long M15 wicks, and I figured, okay, we're doing that for trailed stops. And yeah, they didn't work out so good. I didn't recognize this being consolidation, the same thing that happened up here on the top step account. Not recognizing the consolidation fast enough and trying to get short, trying to get long, and then getting stopped out and just giving up. This was also a short. This was a very bad trade. This was simply, so I did recognize the consolidation right here. Because there was SMT on both the highs and the lows, it was very confusing for me. But I saw the long wicks on the lows and the SMT on the highs, and I figured, okay, well, if this is a consolidation, and let's say we're bearish, which we weren't, we were bullish. Well, let's say we're bearish, then this consolidation high will not get taken out. So I put my stop loss up there, get stopped out, and I actually got stopped out a bit higher than that as well, which was not done very well on my part. Then there's a 15-second model long, which I'm not super familiar with this model. I only see it occasionally, and this one wasn't the cleanest. It still worked, but it was more of a gamble than something I've got back here starter to say what the win rate is or anything of it. So not the best trading. I gave back a significant amount of my gains. I went from being at 5K balance down to like lost about 100 just from these trades in this area. If we look at history as well, we can have a quick gaze at that. So the gold trades in the morning down to here, from the top down to there, all gold. That was really nice, few wins, up 50 something on the day, a bit more, 60. NASDAQ longs throughout the open, those worked really good, with just two small losses at the end of it. So from NASDAQ at the open, made another 60 or so. Then there was the NASDAQ sells that I took in this area here. And you can see there was some quite significant losses, lost like $85, $87 just from those sells. Just from that sell, and then I bought straight after. And yeah, it didn't work too well. Eventually, catching that long on NASDAQ in this area here. And then finally going into the close, well, not going into close, but I saw a really nice 15-minute impulse rejection failure to the short side, and that's where that last bit of P&L just came from. From there to low, 21, 4, and 10. The 4 should have been a lot more. I got stopped out right there. That was simply because we were leaving all of these smooth highs, and we were rejecting from key levels and getting quite bullish reactions. And so I figured, well, if I am going to leave one runner, which I did, which is the one I've got now, and I'll leave that in above this high, so up here, so allowing for us to take out this high if we needed to. And if I'm going to do that, I need to at least lock in something on the others. So I took a partial down here, trailed the stop on this one, and just took a full stop, or took a stop out on that, but it was $4 in profit, so that's still a win. And then this last runner, was allowed to run, which is really nice. And this last piece, I am risking that it runs up and then it opens and then I only get filled up here. But I mean, that's risk that I don't mind taking for the chance of hitting my TP on this 0.01 micro lot. So no worries there really, but yeah. But yeah, as you can see, over trading does not help my P&L at all. Trading just the right amount, and that's another indication of that. However, trading just the right amount, such as on this account, one trade idea, it didn't even hit my TP, and I won. And that is, well, I mean, I came out profitable with it. And that's all that matters, just focusing on something that I can objectively find and look at and has enough constants that I can easily identify it, execute on it, know that I executed correctly, especially here, really happy with how I trailed the stop up. I've seen the SMT and was able to manage risk. There has been instances in the past where the similar situation happens and I trail my stop loss up to here and ES had just hit the buy side, but then it just continues pushing up and my stop loss was just perfectly trailed. It never stopped me out and it keeps running. But in this case, it was going lower. I got out at the perfect time. But yeah, that will do for this review. This particular model is the model that's on my next combine. I am wanting to try, and I might actually only trade this model for that combine. So any other trades I want to take, I can use other accounts for. But with my next combine, I want to just use the RTH trailed stop model because you can essentially use it on any day there's a gap, which is most days. And it's just a really simple, basic framework that just gives you a direction to look in, really, and a narrative to follow. So it shows up a lot, probably at least 3 times a week, usually 4 times a week, and even 5 times a week, but with quite a decent win rate because the entry can be anywhere. It's not like, okay, I'm waiting for a fair value gap to, an inversion fair value gap or something. It's not that. It's a direction. It's a narrative that, okay, we've engineered a pull, we've enticed shorts, attack the high. That's all it is. But yeah, that'll do for this review. Pretty sure that's all I needed to go over. And yeah, excited for the week.